Are you an NFT seller or artist? If so, you should be aware that sales taxes apply to your NFT sales. This is an important consideration to protect the bottom line and reputation of your company. In this video today, I'm going to go over the sourcing rules that apply to sales taxes to determine the jurisdiction that your NFT is taxed in and when those taxes apply. There are two main types of sourcing. There's origin-based sourcing and there's destination-based sourcing. Origin-based sourcing means that the taxes and the tax jurisdiction will be based off of the seller's location, and destination-based sourcing means that the taxes and the tax jurisdiction will be based off of the buyer's location. The great majority of states that apply sales taxes use the destination-based sourcing system, with less than 15 states using an origin-based sourcing system. For states where they are using an origin-based sourcing system, there are usually a separate set of rules that apply to remote sellers that have nexus across states that are not within their home state where they have a physical nexus. So how does it work if you're a remote seller? Remote sellers generally use destination-based selling. So if you're a seller, for instance, in Pennsylvania, and you have a sales tax nexus for NFTs that you're selling in Washington, in this case, you'll most likely use a destination-based sourcing method, and the tax rate and the sales tax collectability and remittance requirements will be under the taxing jurisdiction for that buyer's location within Washington. One of the biggest challenges when you're selling NFTs is actually determining sourcing, and that's just due to the nature of the industry, where most of your customers are going to have pseudonymous wallets, meaning there's not necessarily going to be an identity associated with those wallets, most likely not an address either. So, that is one of the big roadblocks to NFT companies right now getting into compliance with sales taxes. You're going to have to collect your customer's full address at mint or at checkout when that transaction is taking place, in order to appropriately determine where is this sale being sourced based off of your address, based off of your customer's address, and then based off of that, what taxes should apply. Now, to complicate this even further is the level of volume that many NFTs are sold in. That also requires that not only are you collecting this customer's information, but we need to do so in a way that's automated, so that we make the minting of these NFTs or the checkout at your store where you're selling NFTs to be completely seamless for your customers. And the way that we do that is with an automated sales tax software that automates the process of collecting your customers' information and then looking up the correct sourcing rules and then applying the correct tax rate to the sale based off of this logic. So we've only seen a handful of states provide guidance explicitly related to NFT sales taxes, although what we know about states in general and how they tax digital goods and products, there's over 30 states that currently tax this. So NFTs are likely going to be taxable in the majority, if not all, of these states that tax digital goods. One of the states that we've seen most out ahead in terms of giving guidance is Washington State. And one area where they have focused and where I was impressed is in regards to addressing this issue with NFT sourcing. This Department of Revenue is aware of this issue with the pseudonymity associated with the wallet addresses and the fact that a lot of this information may not be collected by the seller. And they've created a 5-point hierarchy for sourcing based off of these different variables and based off of what information that the seller has. Ultimately, the way that this is set up leads to no scenario where you're going to be able to shrug your shoulders and say, hey, I didn't collect my customer's information, therefore I can't pay sales taxes. So the way that the 5-part hierarchy test works is, you'll use this hierarchy to consider where sourcing is from based off of the information that you have. So, we have the address of the buyer, the address from where the NFT is first available for transmission by the seller, the location where the buyer takes delivery of the NFT, the place of business for the seller. So basically, if you see how that works, basically Washington is saying, we're going to basically look at this on a destination format, and we're going to look at the location of the buyer. But if you didn't collect that information, then we're going to revert back to the location of you as a seller in more of an origin-based format, and we're going to tax the sale there. So they're, again, avoiding this issue of someone saying, I lack information to be able to pay the sales taxes, because they're going to say, hey, if you don't have the buyer's information, then the sales taxes should have been collected in Washington, and you're liable for that. Another interesting point is Washington, along with other states like Pennsylvania, have stated that the taxability for sales taxes related to NFTs is interpretations of their existing rules related to digital goods and products, and therefore they can enforce these taxes retroactively. So, if you've had sales in the past where you haven't collected the customer information and you also haven't collected sales taxes, you can still potentially be on the hook for that, given the retroactive nature of the taxation and given this sourcing hierarchy. So Washington has given the most comprehensive and forward-looking guidance. They're sort of leading the charge here, especially when it comes to this sourcing hierarchy. Like I said, there are many other states that tax digital goods and products for which I expect to see similar guidance. And there have been other states that have given guidance, although they haven't went as deep into this sourcing hierarchy like Washington State has. We've seen Minnesota give guidance, Pennsylvania, Wisconsin, among other states. But again, Washington has been the state that's went into the most detail regarding this sourcing hierarchy. So, this is something that we want to keep in mind, and we want to continue to watch closely for future developments. Are you an NFT seller or artist that is worried about your sales tax compliance? Are you worried that you're not going to be able to collect the correct information from your seller in a way that's seamless for your customers and in a way that keeps you in compliance with all of the state tax jurisdictions? Then look no further than Digital Impost. Digital Impost is the first sales tax automation software specifically designed for NFTs, cryptocurrencies, and the blockchain. We've automated the whole entire sales tax life cycle for NFT sellers, from collecting the customer's information to collecting the correct sales tax rate in your native cryptocurrency that you're transacting in, to automating the entire reporting process on the back end. Digital Impost has you covered.